companies are strongly built to their strong AUM as well as the profit margins too. So now for the fundamental terms, my look is to just book some of the profit, that is approximately 25% of the profit, and just hold the positions with the strong stop loss, that is a 448 rupees. As of now, for the time frame of at least 6 to 8 months, the hike would be somewhere around 550 to 575. But my suggestion is to at least book a profit of 20-25% as of now.
25%, at least 25% of profits is what you're suggesting. Let's go across to another WhatsApp query. Rajib has written to us from Mumbai. I hope I'm pronouncing his name right. And he holds 785 shares of Ircon International, bought at 294 rupees a piece. So unfortunately, he's sitting on a loss of about 78,000 there. And he's asking whether he should continue holding or selling. So therefore, I will take this query to you, Kunal. How do you view this particular stock, and do you think it has the potential to turn his losses into profits?
So currently the stock is in the negative territory. We have seen some correction coming in this stock. So overall some consolidation will be seen ahead as well. Till the time it is holding above 168 is still a good buy, because the stock has a potential of going upward towards 240 odd levels. Looking at the monthly time frame, after retracement, a good buying has been seen. About 230, good buying can be seen. So it can be hold with a stop loss of 170 to 160.
Right, okay, and now we have another WhatsApp query of Jalpa. Jalpa has written to us from Gujarat, and she holds 125 shares of Vedanta, bought at 463 rupees a piece, and is seeking a short-term view on this. Kunal, taking this question again back to you, how do you see Vedanta trading, and what's your outlook on the entire steel and aluminium space? Do you think it's more vulnerable to the tariff situation, what's happening geopolitically, and therefore this could also sort of reflect in their stock prices?
Yes, obviously, due to the tariffs, there has been tension in the steel sector. But after a long time, we have seen some buying coming into the steel sector itself. So stock like Jindal, JSW has performed. Talking about Vedanta, Vedanta is consolidating between a range, and it has been more than a year. It is consolidating in a range of 350 to 530 levels. So no major buying has been seen and no major selling has been seen. So interest currently is not seen in the stock. The stock might see some interest above 530 levels where some buying can be seen, but at current level it will be not to hold the stock, because consolidation is still there. We are not seeing any such move in the stock, but stock like Jindal Steel can be hold, because the stock has a very good potential ahead as well. Stock has a potential of moving up towards 1100 and odd level as well. It has given a breakout of falling trend line, so Jindal says look much better comparatively to Vedanta.
Thank you so much for that analysis. And now we have Kalyan joining us on the phone line from Chennai. Hi Kalyan, good evening.
Hi, good evening. My name is Kalyan. I'm from Chennai. I have holding some 100 shares of Trent.
Okay.
I just got recently, some 10-15 days back, at the rate of 6,172, I think so.
Yeah.
So I just want to know for a short term, medium term, and a short term between 3 to 6 months like that. Could you please help me? Because almost after I bought, it has been down to almost 700 to 800 points, I think so.
Yeah,
now it's at 5,400 something.
But Kalyan, I just would want to first confirm your buying price. Did you buy them at 5,172?
No, I'm extremely sorry. I think I told something wrong data, I think so. It was 6,172.
Okay, 6,172. And this is 10 days ago.
Yes, 10-15 days back.
Okay, all right, yeah, because it was trading in the 6,000 range that time. But, and it has fallen significantly since the time you bought them at as well. Therefore, Kunal, like quickly taking up your view on what's happening with Trent again, right? A lot of brokerages, although are bearish on the stock, but the kind of pain this stock has seen, it has dropped about 10 to 12% easily from the price band at which Kalyan bought them at. What is your suggestion with, Trent especially, because Kalyan wants to continue holding them for the next 3 to 6 months?
So my view will be to exit from the stock. The overall trend is negative. So a minor term trend was changed into positive, but recently a gap down opening has been followed and followed by a doji, followed by next a selling candle. So overall pressure is there in the stock. We might see stock trailing towards 5,030 levels. So I will suggest to take an exit from the stock. Instead of this, a stock named Venus Pipe is looking good. Can shift the money into Venus Pipe. The stock has given a breakout of inverse head and shoulder. So the stock has a much better potential comparatively to Trent.
Okay, thank you so much for that, Kunal. And yes, I've joined. And hello and welcome to Girish and Kunal, firstly. And now let's take up another caller who is joining us from Hyderabad now. Hi, Vijay. Good evening.
Good evening.
So, how can I help you today on the show, Vijay?
Yeah, I'm holding 200 shares of PG Electroplast
Okay.
at buy price 800.
Yeah.
So I want to know the technical and fundamental.
Okay, so firstly, I'd like to take fundamental view on it. Girish, coming to you. If I look at the valuation, so it's pretty, it's trading at pretty high valuations there. So do you suggest for somebody who hasn't invested in the counter, in the very first place, should be entering at these levels? And for somebody who has, like Vijay, so what suggestion do you have for him?
So my suggestion is to just avoid as of now. I'm looking out the more reliable levels that would be some around at the level of 650 to 675. That would be the more flexible level for me to just hold this position for at least 7 to 8 months time frame. I'm looking out more into the next quarter numbers also. Just focus on the next 2 quarters numbers, how the working into the sales as well as the quarter sales margins, and then I'm going to suggest for the longer period of time.
Thank you so much for that. And Kunal, what's your sense on the charts? Since he bought it at 800 levels, currently it has dropped down to 740. And if I talk about today's performance as well, so it was down over 2% in trade today. So what do you make of the charts of PG Electroplast?
So PG Electro first on a monthly time frame has formed an Harami candle, which is a negative formation, and the stock has slipped below its 9 EMA. So after a long period, the stock has slipped below its 9 EMA. That indicate that the primary trend is changing. So it's better to take an exit. The stock might slip towards 590 levels. So it's better to take an exit. The overall trend might change. For upward momentum, the stock need to trade above 1000 levels. So it coming rate is not seen, but we can see some correction that will be seen towards 590 levels.
Okay, all right. And now we have Venkat again calling us from Chennai. Hi, Venkat. Good evening.
Yeah, hi.
Please go ahead.
This is regarding Zee Entertainment holding 350 shares at the rate of 142.
Okay.
Need idea regarding next 6 months.
All right. Okay. Kunal, going back to you, Zee Entertainment is the counter that we're talking about. Venkat from Chennai holds 350 shares, bought at 142 rupees, and the stock is now trading around 144. He needs a next 6-month outlook on this one. In the past 6 months, Zee Entertainment has gained about 8%. Do you think it's going to repeat that course?
So overall, I will just give an update. So media was one of the sector which hasn't been performing from since 5 years, and now we have seen that media is performing. So overall, we can expect some buying coming in media. Talking about Zee Entertainment, yes, Zee Entertainment has given a breakout of a falling trend line. I would suggest to hold the stock. Accumulation can be done in the stock as well at a lower level. Till the time it is sustaining above 110 odd levels, and the target on the upside will be 170 followed by 210. So overall, the trend is positive. The momentum is positive. Buying has been seen. Volume is there on the buying side. Talking about the RSI is trending in the upward direction. So overall, the setup is good. Any dip should be used as a buying opportunity in Zee.
Okay, okay. Thank you so much for that. Now let's go across to Sanjay on the phone line joining us from Thane. Hi, Sanjay. Good evening.
Hi, good evening.
Yes, how can I help you?
I just wanted to inquire about a script which I bought, VE Tech Webac. I have 100 shares at about 15.10.
Okay.
Looking at the 1.5 to 2 year perspective.
Okay, and so when did you invest in this counter, Sanjay?
About a month and a half.
Okay, and you're planning to hold it for another 2 years. Am I correct?
Yeah, 1.5 to 2 years, yes.
Okay, okay. So, Girish, without wasting much time, how are the fundamentals of VA Tech, Wabag looking like to you? Is it promising? Do you see it as an attractive bet for a long-term investment purpose?
Yes, can be invested, but more against into the quarter numbers. I'm more focused on the quarter numbers because the last two quarters are not very much promising, and the promoter holding was little bit low in the terms of less than a 20%. So I'm not very much bullish in that particular current range. I'm more focused on that once the valuation would be somewhere around 1150 to 1200. That would be the more favorable range for just starting your investment as of now. And if you are still invested, then just hold your just ready to hold your position for at least 2.5 years to 3 years time frame. Once the things will be more favorable in the term beings of the sales promotion ratios as well as the profit ratios. So just hold your positions if you already hold it up.
Okay, so hold is on V8 at back, and now we have Govind joining us on the phone line from Hyderabad. Hi Govind, good evening.
Hi, madam. Good evening, madam. Good evening, panelist team, ma'am. Actually.
Very good evening to you, Govind. Please go ahead.
I would like to tell to take up my story. Now, actually, I have brought lemon tree hotels 1 year back now, 2000 shares at the price of 127 rupees. The stock is last 1 year consolidation mode, madam, actually. Now, can I add some more, madam, for another 1 year? And how much expectation? At least 20 to 25% return may be expected, ma'am. I can.
Sure. Let's see what our experts have to say about this. Girish, our viewer, holds 2,000 shares of Lemon Tree Hotels at 137 rupees a piece. He bought them a year ago, and he's been saying that the stock has been consolidating for a certain period of time. Now that it is trading around 147, do you think there is an attractive potential for a further upside from here on for the next 52 weeks?
So, if we talk about the whole hotel industry, hospitality industry has seen the heavy pressures in the last 5 to 7 quarters. We can say almost a 2 years time frame. So now the things are going to be more favorable in the term of whole hospitality industry. The lemon tree, if we talk about the lemon tree, the stock is strongly moved into the profit margins as well as the increasing their numbers. We recently saw that they are just introduced the numbers in the Maharashtra. So they already introduced the low ticket size hotel properties, acquired the low size properties in the international markets too. So now the whole hospitality industry is performing well. For the lemon tree, my suggestion is to just hold your position as of now. I'm looking out for the next 2 to 3 years time frame. I'm strongly build up a very strong game changer in the hospitality industry. So just hold your positions.
Okay, so hold your positions for Lemon Tree, and with that we are joined by Teja on the phone line from Nellore. Hi Teja, good evening.
Good evening, ma'am.
Yes, please go ahead with your query.
Ma'am, my query is regarding NMDC.
Yeah.
Can I invest in current levels in NMDC for the long term?
Okay. So Girish, NMDC is the counter, currently trading at 68.3, and recently NMDC substantially reduced its iron ore prices. That's the latest update if I talk about the counter. So how do you view it fundamentally, and do you suggest, Teja, to enter this counter at these levels?
So NMDC is little bit very good propositions for the longer period of time. Obviously, it's a strong dividend stock. We can say we already know that. But in the terms of fundamentals, the dividend yield was excellent. The good returns in the ROE and the track beans of the margin sides, they are just improvising into the margins. Quarter numbers was little bit good, and we are expecting the iron ore situations are a little bit settled down in the next 1.5 quarters itself. So for the longer period of time, it's a very strong fundamental stock I'm looking out. So you can invest this particular stock, but the horizon was at least 2.5 years, 3 years time frame for the strong profit growth numbers.
Okay, all right. And now we have Prakash on the phone line from Bengaluru. Hi Prakash, good evening.
Madam, good evening, madam.
Please go ahead. How can we help you?
I have a little money, madam. I wanted to invest in these two stocks, like GE Power or TD Power Systems.
Okay.
I wanted to know from you and which stock should be a good stock to go for it, madam. Maybe having a 3 months time oriented.
All right. Okay. But only 3 months, Prakash?
Yeah, madam. Short term. I'm a short term trader.
Okay. All right. Kunal, you have two power stocks before you to analyze, GE Power or TD Power. Which one would you suggest Prakash to go and put his money into?
So I would prefer GE Power. GE Power actually have a good setup currently. On a monthly time frame, it is trading above its major EMAs. Then Talking about the volume side as well, volume has been growing, so that is again a good sign. Talking about the RSI, the momentum front, so RSI after cool off has started moving in the upward direction, supporting the price action. Then talking about the directional front, the DI plus has trading about DI minus. This is again indicating a positive momentum. So overall, the setups look good till the time the stock is trading about 213. The stock can go to a 600 odd level. So this will be a short-term trade. The holding period will be 3 to 4 months.
Okay, thank you so much for that. Now, Dheeraj is joining us on the phone line from Hyderabad. Hi, Dheeraj. Good evening.
Good evening, ma'am.
Yes, please go ahead.
My query is regarding IREDA, ma'am.
Okay.
I purchased 750 shares of IREDA today
Yeah.
at 167 rupees.
Yeah.
So, how is the overall outlook? Is it the right time to accumulate more, or?
Okay. And Dheeraj, I'd like to know whether you're a long-term investor or a short-term investor.
For the next 3 months, ma'am.
All right.
Actually, I will wait until the IREDA results. That's it.
Okay, okay.
After the IREDA results, I'll see and I'll.
Understood. So, Kunal, coming to you, 3 months outlook on IREDA, are you anticipating any sort of bounce back in these 3 months? Since if I look at the charts, it's not, it's not that volatile, I must say that. So, what's your sense on the counter? Are you seeing, do you see it crossing the 182 mark anywhere soon?
So I'm not comfortable till the time the stock is trading above 175 levels. So overall, the trend looks negative. The primary trend is negative. The secondary trend is also negative. Overall, some muted action has been seen. Volume is depreciating. So the interest in coming days is not expected yet. The stock might slip down more towards 150 odd levels. It's better to take an exit in the stock and participate into other stocks.
Okay, okay. And Girish, quickly I'd like to take your view, not just in IREDA, but the strategy with which investors, they pick the counters, because the earnings season is it's just around the corner, and, the companies are going to come up with their results very much soon. So, investors try to invest beforehand and then see how the counter reacts. So, I just wanted to get a sense of the strategy and your view on the same.
So yes, I completely agree that now the investors are looking out that this particular stock is little bit cheaper and we are going to invest into it. But for the fundamental terms, obviously we are more looking out what the exactly sectors are rotating. And now if we talk about the sectors for the next 1.5 year, 2 years time frame, so obviously there are just so many sectors we are looking out. One into the energy sectors, but more into the energy, we are going into the coal sector, that is the Coal India. That would be the preferable pick for me in the longer period of time. And apart from that, there would be the financial sector, hospitality sector we already discussed. And apart from that, we can go with the green energy segments also, like Inox India, Inox Green, that these type of sector, NTPC. So there's so many things are already still available in the counters right now, and we have to look it out that which the fundamentals the companies are providing the good results in the last 2 to 3 quarters. We have to focus into it, and apart from that, the promoter holding would be the standard in the term means of directly or indirectly. So we have to just check it out that also.
All right, and now we have Gopinath calling us from Germany. So he becomes the first international caller of this evening. Hi, Gopinath. Good evening. Welcome to Ask Profit. Go ahead with your question, please.
Ma'am, good evening. Thank you so much for having me. Ma'am, I hold CDSL shares, 124 quantity, at a price of 1637.
Okay.
I hold BSE and MCX also.
Okay.
I just want to know the future perspective. I want to hold this as my portfolio stock. Am I doing the right decision, or is it the right time? Can I add more shares? That is what I want to know.
Sure. Let's help you out. Girish, our viewer from Germany, Gopinath, holds 124 shares of CDSL, bought at 1,637. He is sitting on a profit of close to 15,000 rupees at the moment. And CDSL is now trading around 1,754. My first question to you is, he has, apart from CDSL, already a lot of other MII stocks in his portfolio. Do you think this is a good approach? Are these stocks the right counters to keep in one's portfolio given the times that we're sitting in at the moment? And how do you see CDSL in the long run?
So the CDLL is strongly in the very very long runs, because if we talk about the whole demat numbers, how the revenues are generating from the CDSL is very very strongly, and we saw that the numbers are still going in with the range of around 22% year on year basis. So the numbers are still in a focus. But if we talk about the CDSL now, I am more looking out that if you got the opportunity of level some around 1400, 1450, you have to average it out for the longer period of time. But this particular stock is completely based on for the longer period, not a shorter period of time. So you have to just more focus into it. But my suggestion to not for the particular this investor, I'm talking about for the whole investor panel itself, that don't just jump and put the particular one sector in your portfolio. Just diversify into the multiple sectors, because when the things are little bit drastically changes in the single sector, then the whole portfolio will be going down. So in the term of CDSL, BSC, so my suggestion is to just little bit diversified in the other sectors also, rather than to just put your money into the one.
Okay, okay. So don't keep all your eggs in one basket is what Girish is trying to convey. And with that, we have Subbarao joining us from Hyderabad on the phone line. Hi Subbarao, good evening.
Good evening, madam.
Yes,
My
how can I
question
help
is,
you?
I have purchased.
Yeah.
I am holding NCL India. I have purchased at 238.
Yeah.
Short term view.
Okay.
From 50 shares.
Understood.
So I would like to.
Yeah. And when did you buy it?
1 month before, madam. Roughly
Okay.
1 month.
Okay, okay. So, Kunal, coming to you, looking for, Subbarao is looking for a short-term outlook on NCL India. So, the counter is moving in a downward trend. So, do you see it continuing, or is there any chance of a bounce back there? Kunal?
Yeah. So the overall trend currently is looking on a negative side. So we might see the stock slipping more downwards. So the downward side support might be taken at 215 odd levels, but currently it has slipped below its 9 EMA and 21 EMA. That is an early sign of a trend reversal. So overall near the resistance of 228, we have seen this coming. So this is the level from where previously as well in 1st Jan selling was seen, which led the stock downwards to a 180 odd levels. Again, talking about the RSI, the price is making higher high, but the RSI is making higher low. So that is again a divergence. So overall, the setups looks negative. It's better to take an exit. The stock might slip towards 210 levels.
Okay, okay. And experts, we're running thin on time and we have a couple of callers to fit in. So I'd request you to wrap up your advice very, very shortly. Murli is calling us from Bengaluru and he is available on the phone line at the moment. Hi Murli, good evening.
Good evening, ma'am.
Please go ahead.
My query is on Zagel prepaid.
Okay.
I bought 500 shares at the rate of 546.87
Okay.
in January 25.
Okay.
I had a long-term view only while buying.
All right.
And though the turnover has gone up by 5 times and profit by 6 times in the last 5 years,
True.
and they made a few interesting small acquisitions recently, but the company is not performing in this rising market.
Yeah, yeah.
Well, I am incurring a loss of, you can calculate.
Yeah.
It's a good loss. So what shall I do now? Should I hold till it reaches? I am willing to wait, provided something is better. Switch.
Okay, okay. Girish, very quickly, should Murli hold his positions or sell, because he's sitting on a loss with Zagel. He has 500 shares at 546.
So hold your position as of now. The companies are improvising in the good quarters numbers, and we are just expecting the next quarters also a little bit more bouncy. And the profit growth numbers are a little bit approximately 90% of the CAGR. So my suggestion is to hold your positions.
Okay, now quickly let's go across to Dinesh on the phone line from Mumbai. Hi Dinesh, good evening.
Yeah, good evening, madam.
Yes,
I
please
have
go ahead with
today
your
brought.
query. Yeah.
I have brought today at the rate of 161 prime focus,
Okay.
1000 quantity.
Okay.
What to do?
Are you a long-term investor, Dinesh, or a short-term investor?
Yeah, I can stay with 6 months.
6 months view. Okay, Kunal,
Yeah.
quickly coming to you. So if I look at the chart since 25th June, the stock has witnessed a sharp uptick. So what do you make of the charts?
So overall, the trend is looks great. It can be held with a stop loss of 130. The momentum can be expected to a 200, 220s levels. So overall setup is good. Some consolidation at this level can be seen. A dip towards 150 should be again a buying good dip opportunity.
And with that, Kunal Kamble and Girish Sudani, we have run out of time. But thank you so much for joining this edition of Ask Profit and answering all the queries with so much patience and Valor, thank you. Thank you so much. And viewers, a short note to you. We are live with Ask Profit both in the morning as well as in the evening. So you can continue to call us on the numbers available to you. But in the interim, you stay tuned to NDTV Profit as we continue to give you a lot more news and updates on everything that you need to know.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you
Sectoral indices end mixed with Nifty Realty as the top sectoral gainer for the third day in a row. Nifty Pharma falls the most, ends lower for the second day in a row on the back of Trump's tariff letters to countries. Sources tell NDTV Profit the India-US trade deal now hinges on political will, not technical negotiations, adding that India's offer has been finalized, but the ball is now in Washington's court whether to approve or not. According to an internal communication viewed by NDTV Profit, Jane Street tells its employees that attempts to engage with SEBI and the exchanges since February were consistently rebuffed. SEBI moves WeWork India's IPO out of abeyance after putting it on hold for 3 months, but remains under review as of the 4th of June. ICICI Prudential's S. Naren is bullish on India, tells NDTV Profit that he expects a massive boom in the Indian economy and could be a growth accelerator when the world slows down, warning that attractively priced peers are curbing India's FII flows. Sources say the SEBI is in no rush to force options traders to own shares, adding that the regulator is taking their time to study the market and will consult widely before deciding on changes. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Over the next 30 minutes, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. The market saw a mixed day for sectoral indices. Real estate stocks led by Brigade Enterprises and Prestige Estates powered the Nifty Realty to the top, while Nifty Pharma lagged behind, posting its second consecutive loss. But for more, let me quickly go over to my colleague Harsh.
Well, for a predominant part of the day, the market was extremely range-bound. In fact, we didn't see much movement at all, and therefore a quarter of a percentage point of a bounce that we saw right at the fag end of the day was really met with a bit of surprise. And so we closed a 0.25% higher on an otherwise very, very dull day, predominantly. That's the take with regard to the Nifty 50. But what drove that higher was the Bank Nifty, and it was the banking stocks in focus. Kotak, with its quarterly update, stock up over 3%. But then there was ICICI, which also kind of pushed and contributed to some of those gains. So a couple of the heavyweights really pulling their weight with regard to where the Nifty 50 is concerned. And if we pull up the intraday on the Nifty Bank as well, very similar chart structure, but the Nifty Bank was trading in a tight band in around the 0.25% higher mark, and therefore it closed around 0.5% higher at close. So again, we saw that bounce where the Nifty Bank is concerned. So that's on the benchmarks. Now let's talk a little bit about what hasn't done well as well. There was a Titan which was languishing in trade today. There was pressure on the back of its quarterly update and numbers, and we've seen retail really swinging either way. Either the numbers have been good and stocks have reacted well, or they haven't. Within that similar same basket is textiles as well, in focus because of a possible resolution on tariffs, which could well spur textile stocks, and we saw some zing on them today. So that's the one other pocket which did well. In terms of the top gainer, we did see good traction within banking, financial services. So some of those counters or sectors did well, but the realty index was the top performer. It was 1% higher, and consumer durables was down over 2% on a flat day of trade. Consumer durables stocks really took it on the chin. So 2.5% lower on the consumer durable index. The other one was the FMCG index, because the move that we saw yesterday in FMCG was extremely strong. 1.5% higher, but today so just a mild negative bias where the FMCG index is concerned. So that was the other one in focus. But outside of that, metals, pharma, very dull day for most of the other sectoral indices. Let's talk about broader markets, and the advanced decline ratio improved a wee bit versus yesterday, but we saw the broader markets continue to remain subdued and under pressure. A recovery from the lows on both the Nifty mid cap and small cap. The texture of the chart for the day on both the mid cap and small cap index very similar, but nonetheless they underperformed the benchmark clearly for a second straight day. So that was the other thing that played out.
Thanks so much for that, Harsh. Meanwhile, all eyes are on Washington as sources indicate that the crucial trade deal between India and the United States now hinges entirely on political will rather than further technical negotiations. India has reportedly finalized its offer, putting the ball squarely in Washington's court for approval. My colleague Rishabh, who closely looks at this space, sent us this report earlier.
This is the evening before July 9th. The much famed tariff pause deadline is upon us. That, however, has again shifted from July 1st to July 9th to August 1st. But what remains of worth talking about is, of course, the India-US trade deal that has been on the horizon for a very, very long time. What we're picking up now is the fact that it is hinging on political will. It is hinging on what the top chairs in each of these countries, in India and the US, make of the deal. The Indian negotiators, as I'm told, have put forward their best version of a deal. And the ball is now squarely in Washington's court with regards to whether they want to accept a deal or not, and whether they want to make a deal currently or not. What we know is that this will be a mini trade deal or an interim trade deal, the scope of which will be limited to goods only. So don't expect anything on services, visas, IPs, all these other things, all these sticking points, especially agriculture and dairy, have been kept aside for later tranches. The first big tranche is expected around September, October this year, and the full and final FTA may be sometime next year. But what we know from this one is that sectoral tariffs that the US imposed on steel, on aluminium, on auto and auto components, that is also set to stay. That is something that Trump has not budged from in terms of the 14 letters that he also sent to various countries. Those letters also very clearly state that sectoral tariffs will continue, and any reciprocal tariffs or any of these additional country-specific tariffs are separate from these sectoral tariffs. So that is what we're picking up. All eyes on tonight as well. Tonight is the final night before July 9th. So we'll keep our eyes peeled on Truth Social and any other commentary coming in from the ministries in both countries.
That's right, Rishabh. All eyes definitely on Truth Social and any kind of comments coming in either from India or the United States. Moving on, global terror financing watchdog FATF has raised a red flag over the growing misuse of e-commerce platforms and online payment services to fund terrorism. Citing examples from India, including the Pulwama attack and the Gorakhnath temple incident, the FATF says terror groups are increasingly turning to platforms like Amazon and PayPal to procure materials, move money, and even obscure their networks. The report also highlights how state sponsorship and the rise of fintech have created new channels for terror financing, making it harder for investigators to track funds. Let me quickly go across to my colleague Malika, who's standing by in the newsroom. Malika, take us through all the details of this very crucial report by FATF.
Right, Sanjana. And as you mentioned, that the FATF report simply says that e-commerce platforms and online payment devices are misusing their platform for terror funding. And terrorists are using these platforms to basically transport equipments and materials needed for these attacks. It cited the Gorakhnath temple attack in 2022, where PayPal was used as a platform to fund these terror attacks. And then it also mentioned the Pulwama terror attack in 2019, where aluminum powder was used in improvised explosive device procured through Amazon. So the FATF basically recommends that there should be an increased vigilance and cooperation to prevent the misuse of certain platforms such as these, like Amazon in the case of the Pulwama attack. And second, it also recommends the government and the private sector to cooperate and prevent such misusing of platforms from happening in the future.
Right, Malika, thank you so much for those updates. This is as the FATF now is recommending tighter vigilance. Moving on, in its first official response since last week's sharply critical order from SEBI, Jane Street has forcefully rejected the regulator's findings. In an internal communication to its roughly 3,000 employees, the global trading firm described SEBI's accusations as extremely inflammatory, erroneous, and fundamentally mistaken about Jane Street's trading activity in India. Here's my colleague Sajid with all the details.
US-based investor Jane Street has decided to take on the regulator directly. In a letter to employees, it has rejected the assertions made by the market regulator in the strongest possible terms. It has told its employees that the SEBI order is based on erroneous and unsupported assertions. It also went on to say that Jane Street engaged with SEBI and exchanges since August 2024 and modified trading after meeting both their exchanges, which is NSE NMDC and BSE. Jane Street also made this available to the employees, that it has made multiple requests to discuss concerns, but was consistently rebuffed by the Indian exchanges and authorities. On its part, SEBI has made it very clear that the July 3rd and 4th order, which it asked Jane Street to impound nearly 4,800 crores in an escrow account, is a speaking order, and the further investigations are underway, and it doesn't want to comment at this point in time beyond what it has stated in the interim order. This entire thing is now almost heading to a legal face-off, with Jane Street expected to move the Securities Appellate Tribunal, seeking a stay or an interim relief from the Appellate Tribunal. SEBI would be requiring to make the entire investigation. It will have to complete the entire investigation, but we understand from our sources that it will take between 6 months to a year before this investigation can be completed, because the current interim order is just based on the gains which was made in 21 days from Jan 23 to March 31st, 2025. And in that sense, it will take some more time before they can arrive at the final conclusion, and the process would be a little lengthier in that sense. So it's now Jane Street versus SEBI, and SEBI is sticking to his guns, and Jane Street is trying to contest what SEBI has to say with respect to the interim order.
Right, thanks so much for that, Sajit. Let's also hear S. Narain, ED and CIO at ICICI Prudential AMC, about SEBI's role in the investigation of the Jane Street scandal. He downplayed the broader impact, saying that the Jane Street rub-off is limited strictly to weekly derivative traders and not long-term investors.
For a regulator to pass an order of this nature onto a global firm which is trading in Indian equities or Indian derivatives and making this money, do you think this can dampen the mood of global firms which are looking at trading into Indian markets, or not really?
I don't think so. If you look at India, I think so many Indian foreign investors and the most storied investors have made money in the last 30 years by being investors, not by doing weekly derivative options. If you look at the amount of money they have in India, it is $800–900 billion. And they made money by investing for the long term, not by doing weekly derivative options. So I think it has no impact on all those long-term investors. I don't think the long-term FIIs are going to be affected by what happens in weekly derivative options. I think weekly derivative options is something a few investors have focused on. Most of the investors who've been there in India from 1994 till 2025 are very different type of investors. They have taken long-term bets on many companies, and they are big shareholders in most of the prominent companies in India. They are not weekly derivative exposures.
Moving on, WeWork's India plan to go public is back on track, but it's not a done deal yet. After being paused for over 3 months, the market regulator SEBI has moved the company's IPO out of temporary hold. However, as of June 4th, the IPO is still under review and hasn't received final clearance. To tell us more about the company's IPO status, I'm joined by my colleague Agni Dev on the phone line.
Right. So WeWork's IPO has finally moved out of abeyance after over 3 months. Now remember, the IPO was put on hold in March of 2025. And to add some context to it, an IPO out of abeyance is still only halfway through. It will still need to be processed, and the DRHP still needs to be cleared by SEBI. So it's not a done deal yet, like you said. So moving on to why the IPO was delayed, we had brought to you earlier in an exclusive story that SEBI had likely put the IPO on hold after flagging disclosure norm violations in Embassy REIT. To give you some context, both WeWork India and Embassy REIT are backed by the same promoter, which is the Embassy Group. So while reviewing the DRHP, SEBI is said to have flagged Embassy REIT's delayed disclosures in a case against the former CEO. The case involved the Coffee Day Enterprises and then embezzlement scandal. Now remember, Embassy Group we had brought to you was said to be working with SEBI to get necessary clearances, and we had also told you that these were likely to be ironed out soon. Now, moving on to the IPO details, it's a pure offer for sale, so none of the money will go to the company from the IPO. And Embassy, Buildcon, and Vivo Global are likely to offload up to 4.4 crore shares through the IPO. Now, this is a developing story. We'll know more once the DRHP is approved and an RHP is filed. So do stay with us as we bring you more updates.
Right, Agni, thanks so much for that very comprehensive update. We'll continue tracking all the news around this IPO and bring you all of the details. We understand that Agni also caught up with Prabjeet Singh, the president of Uber India in South Asia, at the launch of their new features like Wait and Save and Price Lock. Agni, they've asked him some questions about the prevalence of dark patterns on the Uber app and the app being in talks to acquire Blue Smart's fleet of electric vehicles. Let's listen into a snippet of that conversation.
I want to take a minute and talk about dark patterns. Uber has come out and clarified that dark patterns don't exist on the platform, same prices on Android and same price on an iPhone. But there was a time when things like these were making headlines, and now we know that the government has come out and said 3 months to do away with those dark patterns. So again, I would ask if there is a reiteration of your statement that there are no dark patterns, or can you give us an assurance that within 3 months Uber will be, again, it's not an e-commerce platform per se, but it will be compliant with the whole idea of no dark patterns anywhere on the platform?
Look, I will defer to your experience on what makes headlines and why things make headlines. I can be unambiguously clear that we do not differentiate based on the device type you have. The pricing is a function of the core marketplace and the supply-demand balance at that point of time, and we can say that unambiguously and unequivocally.
Right, which brings me to my last question, and I hope you'll appreciate me asking this on record, but there has been a lot of chatter about the Blue Smart fallout that happened, and again, like you said, you don't know what makes headlines for me, but from the place where I stand, headlines were that Blue Smart's fleet was to be incorporated as an Uber fleet, and then conversations fell through, it didn't happen. Now, can you give me anything more rather than no comments on this entire issue, some flavor, some color as to what happened and where things stand right now?
Look, as the largest ride-hailing platform in the country, at any point of time, we work with multiple players in the ecosystem. For example, our Uber Green service has been launched and is live in 5 cities in association with multiple fleet partners. Uber Black, which is a service which is scaling well, has multiple strategic fleet partners owning those vehicles, managing the drivers, deploying those vehicles on the Uber platform. And we continue to work with different segments of partners to be able to bring that experiences and service to the different consumers.
So there were conversations with Blue Smart?
I will not be able to comment on that.
Right, to catch the entire conversation, definitely tune in at 8:30 this evening. That was just a snippet that we played out. And moving on, a Nalanda resident, Ashok Sahu, has been arrested for allegedly orchestrating the murder of a Patna businessman, Gopal Khemka, who was shot dead outside his home on Friday. Police say Sahu hired contract killers for 10 lakh due to ongoing disputes with Khemka, including a public threat during last year's Bankipur club elections. On the night of the murder, a shooter fired at Khemka at close range and fled. Police have arrested the alleged gunman, Umesh, while another accused, Vikas, was killed in an encounter. Khemka is the owner of Magad Hospital, and several petrol pumps had lost his son to a land dispute 7 years ago. The investigation is ongoing. From everyday nuisances to carriers of deadly diseases, mosquitoes pose a serious threat in urban India. But Andhra Pradesh is stepping up with a high-tech response, SMOS technology. This innovative science-driven approach aims to outsmart mosquitoes using smart monitoring, data analytics and targeted interventions. Andhra Pradesh hopes that with SMOS, it can drastically reduce mosquito-borne illnesses and set a new standard for urban pest control. Let's listen in for more on how technology is transforming the fight against vector-borne diseases.
Andhra Pradesh is on the verge of deploying a new weapon against mosquito-borne diseases. The state government is all set to launch an innovative AI-driven project, which is called the Smart Mosquito Surveillance System, or SMOS. This project is aimed at combating the mosquito menace and protecting the public health. SMOS uses artificial intelligence and technologies like drones, smart sensors, heat maps, and even traps to identify mosquito species, their gender, and even their population density. It tracks weather conditions like temperature and humidity. If there are too many mosquitoes, the system tells city workers exactly where to spray. The pilot project will roll out across 66 locations in 6 major urban areas such as Visakhapatnam, Vijayawada, Nellore, and more. The system constantly sends mosquito data to a central computer, showing live maps for officials to deal with mosquito hotspots. In a proactive step, even hospitals in Andhra Pradesh will report daily cases of malaria, dengue, and chikungunya, so interventions can be quickly focused where they are needed the most. With this AI-powered approach, Andhra Pradesh hopes to put technology at the forefront of the fight against vector-borne diseases.
And we've got a quick update coming in. Donald Trump posting on Truth Social saying and reiterating as per letters sent to various countries yesterday. That's, remember, he sent out letters to 12 countries yesterday in addition to the letters that will be sent out today, tomorrow, and for the next short period of time, tariffs will start being paid on August the 1st, 2025. He's adding that there is no change in this date and there will be no change. In other words, all money will be due and payable starting August the 1st. American President Donald Trump coming out and saying no extensions will be granted. And this is, let's remember, as the world and especially India have been speculating about this trade deal and trying to understand whether we're going to be expecting a trade deal later tonight. This is, let's remember, after 12 countries, including Japan and South Korea, received these tariff letters from the US President Donald Trump. Now the American president coming out and reiterating and making it absolutely clear that as per these letters sent to various countries yesterday, in addition to the letters that will be sent today and tomorrow, tariffs will start being paid on August the 1st and there will be no change to that date. Remains to be seen now whether India will actually get that letter or what the next set or the next phase of the trade relationship looks like between both of the countries. And now let's take a look at some of our other stories that are making news around the country. In another railway accident, 3 students were killed in Tamil Nadu when a school bus was struck by a train while trying to cross an unmanned railway track. Meanwhile, a class 12 student and the driver on board sustained injuries in the collision. According to the Southern Railways, the school bus carrying 4 students was crossing the tracks at railway level, crossing gate number 170 when the train rammed into it. In a dramatic development, a Maharashtra minister and Shiv Sena leader tried to join the opposition MNS's protests against his government amid the raging language debate in Maharashtra. MNS workers heckled the minister Pratap Sarnaik and forced him to leave the protest site in Thane. Heavy rainfall lashed several areas across Kolkata and multiple districts of southern West Bengal, causing severe waterlogging in low-lying areas and widespread traffic snarls. The IMD attributed the downpour to a low-pressure area over the Gangetic West Bengal and has forecast thunderstorms with gusty winds across the region till Wednesday morning. Over 25 crore workers from government sectors such as banking, postal services, mining, construction and transport will go on a nationwide general strike or Bharat Bandh on Wednesday, July the 9th. Major disruptions are expected across public services, while schools and private offices are likely to remain open. And shifting focus to sports business, according to a report by Houlihan Lokey, IPL's valuation has risen to a staggering 1.58 lakh crore, and Royal Challengers Bengaluru has dethroned Chennai Super Kings to become the most valuable IPL franchise. This makes the IPL one of the most valuable sporting leagues in the world. Not just that, the report brings out exciting points on exorbitant viewership, billion-dollar ecosystems, brand partnerships, franchise valuations and a lot more. My colleague Himakshi Bahuguna stands by to give us all the interesting highlights from this report. Himakshi, over to you.
Absolutely, Sanjana rightly said that the IPL has cemented itself as a global sporting powerhouse and is now valued at 1.58 lakh crore rupees. Now, over the past year, alone the league's brand value surged over 13.8% to $3.9 billion. Now, but what has actually led to this massive boom? So this financial leap is matched by a sponsorship boom. Yes, BCCI's 4 associate sponsor have fetched 1,485 crore rupees, and which is actually 25% higher from the last cycle. And also Tata Group's renewed 5-year title sponsorship is worth $300 million, which has secured their partnership until 2028. Now on the franchise front, so Royal Challengers Bengaluru now has the highest brand value at $269 million after clinching their maiden IPL title. And RCB has also dethroned the Chennai Super Kings there. Now, on the viewership front, Sanjana, what is interesting to note is that IPL has shattered all the records. Yes, so over 1 billion viewers tuned in across TV and digital with a staggering 840 billion minutes of the watch time. Now, the RCB versus Punjab Kings finals became the most watched IPL T20 match in the history, drawing 169 million TV viewers and 892 million digital video views, with a peak concurrency of 55 millions on Jio Hotstar. So the digital engagement soared with a 29% rise in the online viewing, and a 49% jump was seen in the connected TV usage. So totally reflecting a new, new fan habits there. And with longer seasons and cricket's Olympic debut on the horizon, Sanjana, the IPL growth trajectory shows no sign of slowdown there. Back to you.
Right, Himakshi, thank you so much for those updates. We'll continue tracking the story and bring you all of the details. And for now, it's a wrap on Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़, और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your
Hello and welcome. You're watching NDTV Profit, and today we are joined by a very special guest, Mr. Prabjeet Singh from Uber, who heads the India and Asia business for the company, has been very kind enough to join us as the company announces enhancements in the app which will help diversify their customer base. Mr. Singh, thank you so much for joining us. So to begin with, easiest question first, I would like you to take me through some of the features that you have announced today for Uber.
No, thank you for having me. Today we hosted Pragati, second edition. This was a forum for us to introduce the new features we are bringing to serve the incredibly dynamic and diverse India market. We introduced features which we are scaling and also about to launch. So for example, there were features around which will help make trips more affordable. Examples of these being wait and save, where you can pay a little less in return for waiting a little longer for a vehicle to arrive. We also pre-announced launch of Price Lock, which is targeted at our commuters, people who are moving from point A to point B on a specific location every day, and we want predictability on those pricing. We also announced scaling up of our Uber One program, which is a memberships program, which 700,000 members are already enjoying, which gives you immediate discounts on your Uber rides. Who doesn't care for saving a little extra when you commute from point A to point B? The second thing which we announced were our series of features around making Uber more accessible to a set of segments. So for example, Uber for Teens, which is really our product based on feedback from parents who want to provide independence to their teenagers and yet have benefit of extra safety features. So this will allow teenagers to be able to book an Uber but get a curated set of drivers who have been specifically trained, extra safety helpline 24/7 and parental trip tracking, which by default will be available. We also announced scale up of Uber for Pets, which was a service which is live but has received absolutely rave feedback from pet parents. And we pre-announced launch of an upcoming feature which is targeted at the elderly. Now we have parents, grandparents in our families who are otherwise incredibly independent, but when it comes to using certain digital apps, they may be dependent on us, which makes it harder for them to commute. We have actually simplified the app interface, which we'll be testing with users in many cities over the next few weeks. And lastly, we also announced features which we under the bucket of Uber Elevated, which is to really for a set of consumers who want a little more, particularly premium users. So for example, scale up of Uber Black, which is a service which we launched last year in Mumbai, is live now in 3 cities, Mumbai, Delhi and Bangalore. And we are actually running short of vehicles needed given the demand which we are seeing for that. So we are working with partners to scale that. We are also scaling up Uber XL Plus. These are even bigger vehicles for specific use cases, group travel. And we are also shared some updates around Uber Reserve, which is your ability for you to book an Uber up to 90 days in advance, stress-free. The ride will show up. You can sleep the night before, book for the next day for your airport pickup or for work, pay a little extra premium for that, and consumers are absolutely loving products like these. So the common theme across all of this, Agni, is really about creating products which can serve different segments, different use cases, so that we can be relevant to every Indian.
Right, Mr. Singh, which ties very well into my next question. If we talk about serving customers, so the government notification that came in, not notification, but the new rules that came in about the cab aggregators. So there's the advantage of charging a 2x fee when there is a surge demand surge, but there's also the cancellation on drivers, which is somewhat of, I would say, deterrent for drivers to cancel rides on the platform. So first of all, my question would be, if you see a 2x demand surge pricing, what kind of a revenue windfall would that turn into? I mean, I understand if you don't give out numbers for Uber, but in general for the industry. And was any of this done in consultation with companies like Uber and Ola and your cab aggregator platforms?
I think what matters is the bigger picture here, that the government has been incredibly proactive in continuing to come up with newer guidelines based on how the industry is evolving. The aggregator guidelines 2025 are a follow-up to the previous edition. It reflects feedback from multiple players in the ecosystem: drivers, riders, civic society, aggregators, and we are welcoming the direction in which those guidelines have been published. We look forward to working with the states who now have to adopt them in entirety or in parts as they come up with their different state regulations around it, and we'll continue to work with different states. And I think the biggest thing for me is the signal which this sends, that shared mobility is being truly embraced. It's not just the size and scale of the platforms which you can already see and experience. It's a recognition that India, as it goes from a developing to a developed economy, has this incredible opportunity to leapfrog private vehicle ownership, and shared mobility is the path forward. So some of the mentions around which enabling two-wheeler based bikes taxi services, enabling private vehicles to be utilized for shared mobility within the ride safety frameworks, being able to allow variety of use cases to be embraced within the umbrella of shared mobility. I think those are all signals in the right direction.
Right. My next question again, I understand if you don't want to talk numbers, but if we talk about market share in the overall cab aggregator space, like across vehicles and formats, what kind of a market share would Uber command? And to build up on top of that, there has been a lot of push from Rapido to change the existing model there. Commission structure is what people are really drawn to as cab drivers themselves. So has there been any discussion? I know it's a global company, but any discussion on a certain level that commission models might be relooked at if this attains certain scale? So again, market share, and how has Rapido changed that, and commission models?
Those are lots of questions within one. Let me try and address each of those. Look, fundamentally, we believe the fact that there is competition in the Indian ride-hailing space is actually a fabulous thing. But that shows that there is incredible space for growth. It is incredible space for more innovation. It forces all incumbents, including market leaders like us, to continuously innovate. Right? You heard some of the features we are introducing, continuing to build for different consumer segments. But at the same time, we are very clear as Uber that we want to be competition aware, not competition obsessed, which means we are tracking what's going on in the market. Our simple goal is to solve for winning the hearts and minds of the riders and hearts and minds of the drivers. The drivers have choice, the riders have choice. And the only way they will choose Uber is if we continue to meet their expectations on multiple dimensions. Having said that, I think when it comes to core commission structures, etc., the core thesis is, at the end of the day, what's most important is drivers have fair, sustainable, and transparent earnings. And independent of the models with which commission is charged by a platform, I think that these three things matter more than anything else. We are continuously innovating. We have different versions of different structures in the market. I don't think that is going to be the single biggest determinant of how the market goes. It's really about keeping these tenets alive: fairness, transparency, and sustainability of the earnings. That's what the drivers care for. I think what does matter is, and we've been advocating for this, is continuous level playing field on the core legal and taxation structure in the market. I think it is important that irrespective of whichever commission model one is following, you are able to comply with the law of the land. We take a lot of pride in that, and we hope that it continues to play out in the industry.
All right, so I'm being told I'm out of time, so I'll limit myself to 3 more questions. First of all, I would like to know what plans for two-wheeler taxis are, because we know it's a bumpy road. Karnataka just banned them. Mumbai is having some headwinds, and it's usually these larger cities which come out with problems, and off scale, when it's a large city, there will be more problems to deal with when it's a two-wheeler taxi scenario. So is there a change in the way two-wheeler taxi strategy will work for Uber going forward? Will you focus, say, more on tier 2 and tier 3 cities than tier 1 cities, or will you play it out on a state-wise level?
Okay, I'm a thinker for the long term. I think I can't imagine a world where two-wheelers won't be an integral part of India's ride-hailing ecosystem. The Motor Vehicle Guidelines 2025 spoke about encouraging states to kind of come up with frameworks. There are multiple states in the country, including Delhi, which have formal policies around bike taxis. Maharashtra, 48 hours back, notified its bike taxi policy, and that's an industry which is scaling well because it is solving for a real consumer need, including a great feeder into the metro systems. And it is also solving for a livelihood opportunity for hundreds and thousands of earners. So I don't see a world where bike taxis won't be a reality across the country. There will be certain states which will take time and consultation to come up with the right framework. So we continue to engage, take a long-term view on that.
Last two questions, like I said. So I want to take a minute and talk about dark patterns. Uber has come out and clarified that dark patterns don't exist on the platform, same prices on Android and same price on an iPhone. But there was a time when things like these were making headlines, and now we know that the government has come out and said 3 months to do away with those dark patterns. So again, I would ask if there is a reiteration of your statement that there are no dark patterns, or can you give us an assurance that within 3 months Uber will be, again, it's not an e-commerce platform per se, but it will be compliant with the whole idea of no dark patterns anywhere on the platform?
Look, I will defer to your experience on what makes headlines and why things make headlines. I can be unambiguously clear that we do not differentiate based on the device type you have. The pricing is a function of the core marketplace and the supply-demand balance at that point of time, and we can say that unambiguously and unequivocally.
Right, which brings me to my last question, and I hope you'll appreciate me asking this on record, but there has been a lot of chatter about the Blue Smart fallout that happened, and again, like you said, you don't know what makes headlines for me, but from the place where I stand, headlines were that Blue Smart's fleet was to be incorporated as an Uber fleet, and then conversations fell through, it didn't happen. Now, can you give me anything more rather than no comments on this entire issue, some flavor, some color as to what happened and where things stand right now?
Look, as the largest ride-hailing platform in the country, at any point of time, we work with multiple players in the ecosystem. For example, our Uber Green service has been launched and is live in 5 cities in association with multiple fleet partners. Uber Black, which is a service which is scaling well, has multiple strategic fleet partners owning those vehicles, managing the drivers, deploying those vehicles on the Uber platform. And we continue to work with different segments of partners to be able to bring that experiences and service to the different
So there were conversations with Blue Smart?
Be able to comment on that.
That's what I was asking, like if any color you can provide on that, because it's all speculation right now, so something to set the record straight.
I am seized with what I can control, which is we have this incredibly big agenda for the India market to serve different consumer segments and bring to market features like these, which our consumers have been giving us feedback on, and we'll continue to build towards that.
Right. As I promised, that was my last question. You've been incredibly gracious to take the time and talk to us. Ladies and gentlemen, that was Mr. Prabjeet Singh, and do stay tuned to NDTV Profit for more news.
Let's get in a very special voice. Mark Matthews, Head of Research Asia at Julius Baer, Johnson right now with his thoughts on all that's happening around the world. And Mark, good afternoon to you. Thank you so much. It's always a pleasure talking to you, and you know that. So thank you for taking the time out. And I hope all is well. But is all well with the world at a point of time when the US and Donald Trump are giving a deadline and changing it, saying that the new deadline is also negotiable, but at the same time launching tariffs and trade deals or some trade deals which are, well, slightly different than what they'd promised?
I'm fine, thank you, by the way, and it's an honor as always to be on the program. I think now the big beautiful bill is out of the way. He's come back to the tariffs, and the stock market is almost at an all-time high, so I think he probably feels more confident doing it than when it was just 1% away from becoming a bear market back in April. Now, Reuters says that the Europeans are not going to get sent one of these infamous letters, so it seems the letters are largely being sent out here to Asia, and the two countries where it matters the most are South Korea and Japan, because they export a lot to the United States. And so we'll see how it goes with both of them. Now, even if Donald Trump forces the Japanese to open their market to American rice, I doubt Japanese consumers will buy it in stores. So I don't really think it's a big deal if Japan gives a little on that. Like India, the agricultural sector is extremely sensitive. It is in all countries in the world. But I would just say that if you look at most other countries, including India, what percent of their economies are derived from goods exported to the United States? It is not large. So it is fairly large for South Korea and Japan, but for most other countries it's not. In India, I mean, it's something like, I don't know, 2% of GDP, very small. So I suspect that the tariffs are more noise than substance. And to me, the ultimate barometer of that is Walmart's share price. If the tariffs were really going to be a big deal, then I don't think Walmart's share price would be 5% below an all-time high, which is where it is today.
Very interesting take. So no one's taking this too seriously. The boy who cried wolf and the president who cried tariffs. Maybe that's what we're seeing till you have those final prices coming in. But Mark, I want to come back to that comment on India, because there's no letter, there's no deal yet though. What do you think, in your view, the outcome will be or is likely to be?
I don't know. There's talk of a mini deal and there's talk of an extension. But just to reiterate what I said earlier, I think it's mostly noise. This is not impactful for the Indian economy. And the noise could be bad, because if the government does allow genetically modified corn and soybean into India and opens up the dairy market and the automobile market, for sure the opposition would take advantage of that to say that the government's been weak. And there's no doubt the Americans are very competitive in agriculture, so they could take a dent out of that market for India. So, I mean, if the Americans end up putting a 26% tariff on exports of Indian goods to the United States, I would just say it doesn't really matter, because exports of goods to the United States are a very small part of India's GDP and certainly not what drives it.
Even the worst case scenario of 26% doesn't really matter. I mean, what we're learning is that those red lines on agriculture are unlikely to be crossed as far as the Indian negotiating team is concerned. Does that change at all the global view on the Indian markets? Trade deal or no trade deal?
No, I think it's irrelevant. The thing that moves the Indian market first and foremost is the earnings, which are forecast to be in the single digits for the impending results. But if we have a few outliers surprising to the upside, like in metals, I think we could even see double digit, and most certainly in the quarter beyond, we're going to move into double digit earnings, because both the central bank, which was very hawkish last year, and the government, which didn't spend much, those have done a 180-degree turn. The RBI, as we know, is dovish. And I think that will translate into credit growth rising into the teens again in the next few quarters, and that'll percolate through into the economy and earnings. And the government is spending again. So with that backdrop, I don't see much to take the Indian market down unless there's a big global correction, because it is a market that is sensitive to the world market. But on its own, I think it looks very good.
Got it. Mark, in terms of what happens to foreign flows in light of the fact that there has been some dollar weakness thus far, maybe there is more in store, and opposing views there, because some people believe that a lower dollar means that quantum of flows will actually go off, versus there being a view that de-dollarization and people wanting to diversify away from the US, which has been the first port of call for nearly the last 15 years, mean that emerging markets could